All right, everyone, here we are with another video with Invest for Tomorrow. And as we could see here, we have on the screen Nndm, Nano Dimension. We're going to talk about Nndm stock and how ARK Invest has reacted. So I'm excited to share some information with you guys about that. I'm excited to look at the new resistance levels and support. But let's go ahead and look at something before I move the resistance and the support over. So the first thing is Nano Dimensions tricked us, right? But it might be a healthy trick, and we're going to look at something in just a moment. So if the market continues in this healthy trend that it already has been going into, and I'm going to share more information about what I think about the S&P 500 index and how it's been reacting and the 10-year treasury. So stay tuned for that towards the end of this video. But it jumped up and it pulled back, and this could be healthy. That is something that I do want every single investor and viewer to be aware of. And yesterday's resistance that was broken through today became a resistance again today, and the big rejection really happened there. So we had a big rejection. The stock tried to pull itself back up and level off, and it got rejected again, pulling down and kind of bouncing off of yesterday's support over to being in the middle. So that's looking pretty healthy. Now, we need to see how the market does tomorrow, going into the rest of the week as well. But Nano Dimensions really tricked us here with the bullish run looking phase here. Yeah, it broke the resistance and it quickly came right back down to it, but it leveled off kind of at a break-even point. Now, it did a slight pullback here back from the 8th to the 9th, and it ran again. So this might be the next healthy pullback before the next run. That's how we need to look at it right now. We need to see what's going to happen tomorrow, and I'm going to share with you guys the new resistance level and support based off of yesterday's movement to today. But I do want you guys to be aware that yesterday's resistance level here is pretty important, and that point right here is 973. We definitely want the stock to break through that, but I'm going to narrow it in right here at these points as we look at it. But before we jump into all of that, let's look at how ARK Invest has reacted. So we have here ARK Invest, ARQ on the 9th. They had 6.8 million, but let's go ahead and look at it to the T. 6,858,030 shares. And ARQ today on the 10th, they have 6,858,032 shares. So when we look at the difference, they did not move up by much. Look at that right there from the 9th over to today. Only 2 shares. I'm not sure what that meant for them. I don't know if they were trying to like nibble at it, or they bought a share or two to get alerts. You know how sometimes you buy a stock to add it, but I mean, they should already have it on their watch list. So I don't know what was the goal there to go up by 2 shares. I don't know what was their intentionality, but literally all they did was add 2 shares. So let's go ahead and see ARKW from yesterday to today. So they had 5,642,601 shares, ARKW on the 9th. And let's look at today's movement. So they had ARKW on the 10th, 5,660,679 shares. So when we go ahead and look back at yesterday, they had about 42,000 in the 600,000 range, and now they have 60,000 in the 600 range. So right there, you could see they went up by around 18,000 shares. They're being a little hesitant, but they've been like that even yesterday. But the one thing I've noticed is that they've been buying, and that is big news for us as investors and every single spectator that likes to watch ARK Invest and their movement. That right there speaks volumes, but they're nibbling into the market kind of slowly, but it shows us how much they still believe in Nndm and how they see room for this to go back up and probably even test these highs, or probably even break through them some point in the future. So let's go ahead and look here at our resistance and support. So here we are with the 50-day moving average, and that's 917. Anything below that is bearish. Anything above that is bullish. We are close to tug of war zone, and the 50-day moving average has been catching up to the price. that is why today's resistance level that we're going to talk about, the bulls definitely need a breakthrough to then break through yesterday's resistance level, and then their next point would be up here at the highest peak of 1047 to continue the run and the momentum. So let's look at our support first. So it's 912. If that gets broken through, you want to watch this carefully. How quickly is it moving to newer lows? And if the bulls are trying to reappear and bring it back up, or are the bears tearing this one down fairly fast? You do want to be aware of that, and you want to watch this closely. Now, our resistance level is 954. Now, I want to emphasize, the bulls need to break through this point, turn it into a support to reach newer highs, newer resistance levels, and get deeper into bullish territory, and to continue this momentum before the bears gain traction and the 50-day moving average continues to catch up to the price, and it gives leverage to the bears. So the bulls definitely need a breakthrough, 954, turn it into a support to reach newer highs and new resistance levels. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the like button to let me know you watched this video, and double check if you've clicked on the bell so you don't miss a single video that I post, and share this with your friends and community so that they are aware and more investors are becoming aware of all the information that we share here in Invest for Tomorrow. So stay tuned to the end so that you guys don't miss out on all the information I have to share with you guys about the S&P 500 index, and let's make some money. So here we are with the S&P 500 index, and after having such a big dip, quote unquote correction so far, after hitting these lows down here of 37.23, it seems like we've seen the bottom for now. Now, I want to emphasize, for now, because we have many other events coming up next week here in March with the Federal Reserve meeting, and if the market does not react sensitive to that meeting, the next meeting is in April, and we want to be aware that year-over-year inflation results and numbers will be coming out soon, and we need to be prepared and aware that if there was to be a correction, I don't think that we're going into a crash. If anything, it's just the market becoming sensitive to certain numbers and certain things. Now, we've seen the market see itself become very sensitive when the Federal Reserve has come out to speak about everything that they want to reassure us in as investors and the public, and it still has made the stock market go a little bit lower when they've reassured things. So we need to see how the meeting goes and how sensitive the market reacts to it. But let's look at this article. So it says here, 10-year yield falls after Treasury auction demand is adequate enough to ease investors' fears. Now, we can read on about this and it'll show us all the different changes, but literally the heading is exactly what we were looking for. We wanted the Treasury auction demand to be pretty well. Now, it wasn't as great as it's been before, but like it says there, adequate enough to ease investor fears. And you can see here the 10-year note just falling downwards throughout the day. And we can see here how it ended at 1.53. So we want to watch this carefully. If it could just kind of stay sideways, that would be a really good sign. But if it actually just dips a little bit more, even better. But we don't want to see any spikes in this because that would show us volatility again and in the market if they're still correlating. Because remember, we've talked about the detachment could come in the near future, and whatever goes on with the Treasury yield won't do much of an effect to the market if the market is feeling optimistic, bullish, and institutional investors are loading up and individual investors are loading up as well. So we want to be aware of that and pay close attention to how they correlate or if they finally detach. But the main thing I want every single investor and viewer to be aware of is that yes, this run is because of the easing on the demand of Treasury yields going up, easing the pressure on investors. The market's going up, optimistic, hopeful. Stimulus is going to be passed. That's in the works. Now it passed the Senate, it went back, and it's in the works of finally officially getting closed out and probably
As
going
always,
to
guys,
become
thank
official.
you guys so much for watching.
Once it's signed,
let's make some money.
And then we have the yield actually sitting at lower rates and sitting sideways. As long as it doesn't spike up crazy or anything like that, the lower it goes, it might be even better. But even if it was to just hang out sideways or kind of consolidate up and down, getting close to 1.54 and coming right back down to 1.52, that would not be something of a concern. If anything, that will look kind of healthy when it comes to the 10-year treasury and bond purchasing and so forth. But right now, the market is upwards. We want to be aware of these dates. And as always, guys, if you learned something new, subscribe to the channel. And if you find this helpful and informative and you want other investors and viewers to be aware, share it with your friends and community. And don't forget to hit the like button, guys. I really appreciate that. And that's the best way to let me know that you watched this video. So